The market that we are active in, so basically the CE region, Poland and Germany, certainly the CE region and Poland did much better than Western Europe, I have to say. This is mainly because of the higher economic growth that we see there. Also in terms of valuation development, we've seen a stabilization. This is why for us, the CE region has done much better. I mean, selectively, we've also done business in Germany. We are still very selective. If we look at how our company in this market environment is doing, we were clearly able to increase our loan volume quite significantly, actually, more towards the end of the year. And we're also quite happy with the quality of our loan portfolio that we have. Erste Group is a generalist, so we are active in most of the sectors. We have financed. Erste Group is active in financing large office transactions in Poland, also in Romania. We had mixed-use assets, a very big one in Austria. We had retail parks, we had logistics assets that we financed actually in the whole region. And also last year, we were more active again in the hotel market. And that includes also in Germany. Obviously, what we see is still quite a reluctance of companies to invest in, especially the region Germany, Austria, and Western Europe. So we see in the industrial sector a bit of a weakness that has obviously an impact, a slightly negative impact on this particular sector, also in our region. This is something that probably will not go away in the short term, mainly because there is currently a lot of insecurity what's going to happen in terms of tariffs, I would say. But let's see. Overall, I would say the economic situation, but mainly the retail demand side in Central Europe is still quite strong. That has this positive impact. But as I said, on the industrial logistics sector, we see now some beginning slight weaknesses. Interestingly, the hotel sector is doing quite well. We see that the tourism in Europe is doing very fine. This is what we see in terms of demand for hotel rooms. So we've seen hotel transactions. We have financed more in this area. Then I would say still very strong is the retail park sector. I would say the saturation is not that high. We see in the shopping center area, we see the saturation already being higher than that. But in retail parks, secondary cities across the region, I would say there's still potential to develop. This is what we see. And here we were also active. Otherwise, offices in general, there's not much new supply, except maybe in Budapest, we see quite some supply, but all other markets are rather healthy, I would say. The vacancies are in most areas in a single-digit area, big exception being Budapest, as I said, also Bratislava. On the residential side, it's mainly still developments that for sale that are going on. This residential for rent sector is still rather small overall in Central Europe. It's the most progressed in Poland, obviously. In Germany, it's obvious that the situation is weak. I don't see too much signs that it's going to improve. I mean, apart from the clear thing that the interest rates will go down further, which obviously theoretically should support, but probably it's not the main factor at the moment influencing decisions of companies. It's probably more the political environment and the tariff situation that influences this. On the other hand, we see that production is still being moved from Germany to neighboring countries, in particular Poland, but also Czech Republic benefits from this. This is why I would say in this sector, despite the weakness that we see in Germany and probably also in the rest of Western Europe, we see a better situation in these neighboring countries that benefit the most from this nearshoring trend. And this is in particular Poland, Czech Republic, to a certain extent also Slovakia. Well, looking at 25, I would say what I would hope for and also expect to a certain extent is that the transaction volume should increase further. We've seen last year, 24, that Poland has done pretty well. So this was the clear majority of all transactions that happened in Poland. So here my expectation or my hope is that there will be the other countries also catching up a bit and seeing more liquidity. Then in terms of valuation development, I would also expect that we have seen the bottoming out last year in 24 and that in 25 we should see again some first positive signs, obviously coming from increasing rents, but also from decreasing cap rates again, because interest rates are going down, especially in euro terms. So here the pressure on cap rates to come down again should be there. This should have a positive impact on valuations. Overall, the economic activity, the projections are for slight recovery this year, Although I have to say I don't see the signs yet and I don't see it visible yet, but let's see. I hope that this will actually come, and then it should also have a positive impact on our core markets.